Hey, what is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and today's video is going to be really eye-opening. We're going to be talking about how mortgage demand for new construction is dropping dramatically. Applications are down 10.6% according to the Mortgage Bankers Association, and we're going to be talking about how that impacts new construction and home builders moving into the future. Now, if you are new to the channel and you like all things finance, real estate, and investing, please hit that like button, tap that subscribe button right there. And if you haven't done so in the past, please consider leaving a comment. Your comments really help me as well as others learn and grow. And without further ado, let's jump right to that article. All right, so up on the screen, I have the article from the Mortgage Bankers Association. As always, I will link it in the show notes below there. But it says mortgage applications for new home purchases decreased by 10.6% in April. So rising rates is really making an impact. We have buyers that are quitting the market, or they are holding back, pulling back, whatever you want to call it, with regards to their home purchases. Now let's dig into this article here. It says that the MBA Builder Application Survey, BAS, the data for April 2022 shows that mortgage applications for new home purchases decreased to 10.6%. That is year over year. Now, according to Joel Kahn, the Mortgage Bankers Association Vice President of Economic and Industry Forecasting, he says that new home purchase activity declined on a monthly and annual basis in April as the spike in mortgage rates cooled demand and home builders continued to grapple with rising costs, supply chain issues, and extended completion timelines. So a real quick note on this. This is what we are seeing across the board. And I just did a video recently according to the National Association of Home Builders, and they mentioned they're dealing with the exact same thing. So we have so many cross currents at play here. One, you have the rising interest rates. That is putting a lot of pressure on home buyers, particularly first-time home buyers who are trying to participate in this market. In addition to that, they have supply chain issues that are causing delays in their ability to get building materials. In addition to that, they have rising costs of labor and, of course, materials too. So you have the cost of construction going up all the way around. It's extending their timelines. So let's say the average house takes 4 months to build when you're really rocking and rolling. Well, now let's say timelines have increased by about 50%. Now it takes 6 or 8 months to build a home. Now, for many home buyers, when you go in and you check out the sales office, and you're looking at new construction, the homes are not built yet. So you're actually signing up and writing an offer on these properties that are going to be 6 or 8 months out. Well, let's say 6 months ago you signed up to purchase a property and you agreed on a price. Well, fast forward to today, that note rate or that mortgage rate that you were going to get back 6 months ago was probably somewhere around 3%. Well, today it's probably somewhere around 5.25%. So if you were to go through with purchasing that home is going to cost you more than you ever expected it to cost. In addition to that, some of these builders are not wanting to lock in a purchase price up front, and they're putting clauses in their contract that say they have the ability to raise the price based on their building materials because their profit margins are getting squeezed. So a lot of cross currents here for the home builders and for those potential buyers. I would not be surprised to see a massive uptick in contract cancellations for new construction. Anyway, let's continue. It goes on to say, with the supply of existing homes on the market still extremely low levels, the new home market is an important source of housing supply. However, the pace of construction has slowed in recent months. MBA's estimate of new home sales declined for the 5th consecutive month. We are sitting at 701,000 units. That's the slowest pace since May of 2020. Wow, that's really interesting. So May of 2020 was right after the pandemic and the lockdowns kind of went into full force. So naturally, there was not going to be many home sales during that time frame. But now we're kind of reverting back to those levels. So we're really starting to see things slow down. Now, Joel Kahn added that the average loan size increased to a new survey high of $436,576. And over half of applications were for loan amounts greater than $400,000. Higher rates and sales prices and larger loan amounts are eroding housing affordability and pricing some buyers out of the market. Yeah, absolutely this is happening. In fact, the share of first-time home buyers has decreased year over year for the last couple of years. A couple of years ago, it was up somewhere around 33-35%. We are down to about 28%, according to an article on Redfin, and a video that I just did earlier this week. Now, the article continues to say that the seasonally adjusted estimate for April is a decrease of 6.8% from the March pace of 752,000 units. On an adjusted basis, the MBA estimates that there were 65,000 new home sales in April 2022. That is a decrease of 12.2% from 74,000 new home sales in March. So sales activity is going down, and it looks like the construction of new units is starting to slow a little bit. And then one other thing that they added, which I thought was fascinating, it says that conventional loans made up about 76.7% of all loan applications that they did receive, and then FHA loans make up about 13.1%. USDA loans, which is more of a rural loan product or agricultural loan product, that only makes up 0.2% of the market. VA or veteran loans made up about 10.1% of mortgage loan applications. And then, as they mentioned earlier, the average loan size is up to just under $437,000. All right, so that is going to wrap up the article from the Mortgage Bankers Association and that builder application survey that they did. I found it really interesting. We are starting to see this shift or this temperature change in the market, and I think everybody's feeling it across the board. A lot of these inflationary pressures, the rising cost of goods and services across the board, are getting people to just take a little step back and reevaluate their large purchasing decisions, including home builders. They're really getting squeezed around the margins. Trying to turn a profit making affordable housing is very, very hard for them. So they're having to build homes that have more margin, which means that they have to sell at higher price points in order to do that. So in many cases, at least in my view, they're likely going to be building larger homes, which are less obtainable for the first-time home buyer, especially now with the rising mortgage interest rates. So what do you think is going on? Do you think this is a trend we are going to continue to see? Do you think we're starting to see the market shift? Please leave a comment below. I would love to hear from you. And if you haven't done so already, please like and subscribe, and we'll see you on the next video.